What's up, guys? Welcome back to Wall Street Wealthy. I'm your host, ST Warren, and this week we're trying something new. We have our very first installment of the Wall Street Wealthy podcast. For the first episode, I'm very happy to invite my good friend, Norman Chu. Norman, would you like to introduce yourself?
Hi guys, so my name is Norman Chu. I am currently a rising senior at Case Western Reserve University. I'm studying stats and finance. And my type of trading that I do on a daily basis is I do scalps on SPY. So scalps, I'm referring to short-term options trades. Don't really do much of crypto. But on an average weekly basis, I'd say I probably place upwards to 20 to 30 trades per week. Depends day to day, but it definitely is just dependent on the price action, the levels that I see. From my trading career so far, I've been trading for about 2.5 years now.
That's a wonderful introduction, Norman. So, as you may know, most of our traders and our members are actually new to trading. So, I wanted to ask you, do you have any experiences or stories you'd like to share from your past 2.5 years of trading experience?
I have a story where when I first started, I only bought stocks. And when I first got into options trading, I actually blew up my first account. But I have to say, though, that first account, the stocks that I had held, if I had held them, would have been easily up 3 to 4x just as a whole. So, more of the story is definitely long term investing does beat out short term day trading all the time. However, there's definitely ways to be profitable either way.
I'd agree. Long term value investing would always beat out day trading for the most part. So, next we'll move on to one of the questions asked by one of our members, and that is how do I get out of a losing trading streak? Is it better to trade more or trade less?
So if you're currently in a losing trading streak, I personally feel the best way to get out of this would be to just simply take a break, reassess your strategies, reassess how you approach the market and how you enter your trades and what your triggers are. And if after reassessing you still are having issues, then I feel that you should take another step back and try and rechange and revise your strategy.
For the most part, I'd agree with you that the best solution is to take a step back and reevaluate your strategy. But at certain times, the market volatility is so drastic that it would be kind of dumb to sit out on a trade. So, what's your opinion on herd mentality? I know we're getting into some behavioral finance here, but I wanted to pick your brain to see what you have to offer to our audience regarding herd mentality and going with the trend or against the trend.
So for behavioral finance, there is a super famous concept called herd mentality. Herd mentality essentially states that people start buying things just because everyone else is buying things, and people start selling things just because everyone else is selling things. So it is very important to understand that it is always good to follow the trend, because if something is in an extremely strong uptrend or downtrend, you shouldn't be trying to time reversals because the overall longer term trend is still present. However, it is also very important to not always follow the herd, because if you're always following the herd, you're going to be behind to making where the actual money is.
I agree. That's some very good points you made right there. And I wanted to ask, do you have any examples of when it's a good time to go with the trend or when it's a good time to trade against it? Maybe talk about like GameStop and what we saw there.
So essentially, the best examples of this would be with GameStop and Dogecoin. And I personally feel that there was a lot of hype, there's a lot of craziness as they were both approaching their peaks. However, if you, for example, had been against the herd in the very beginning or at the very top, you would have made a lot of money, because in the very beginning, when GameStop first took off before the short squeeze occurred, there was a lot of entries that you could have made when GameStop was like sub $20, sub $10, and you could have easily 10, 20x your money when it got to the peak. Same thing with Dogecoin back in 2017. Everyone called it a meme. Everyone said it's going to go to zero. However, if you had even invested a few $100 or even $20, you would have made a lot of bank. But at the same time, when they both reached their peak and as the prices were surging up, the herd mentality was everyone buy now. Now it's never going to get cheaper again. Everyone get in. And that is also a super, super critically bad way of processing how this information comes. Because if you can see, like at the peak for GameStop and Dogecoin, prices have been cut by nearly 50 to 60% if you had bought at the peak. So it's always extremely important to understand that you can't just follow what everyone else is doing. You have to have your own strategy, your own ideas. But at the same time, it is extremely important to understand what the overall trend is.
I know our time is quickly running out here, so I want to ask, do you have any disclaimers or do you have any final tips and tidbits of advice for new traders coming into the markets?
All the stuff with just her mentality. Like it's hard to completely explain because like especially for newer traders, they don't really know how to formulate their own ideas or their own thoughts towards just like how to place a trade, how to even just make a profitable trade. So I feel that personally it is extremely important to first get your fundamental like understanding of how price action technical analysis works. Otherwise, all the information that I gave, I feel like it's not going to be as relevant and it won't be as substantiated.
It was a pleasure having you on the podcast, Norman. I know you have to go now, but you shared a lot of valuable information that'll help a lot of new traders in our community.
Anyways, I hope my insight towards the market was helpful, and thank you, Surya, for having me here on this podcast.
And thank you so much for being here. For everyone, once again, that was Norman Chu. Norman has been trading for a little under 3 years, and he studies statistics and finance, and he's also done internships with some of the leading investment banks around the world. So, up next, I'd like to invite Mark Egglesetter to talk about a trader's mindset. So, now, Mark, would you like to introduce yourself?
Yes, absolutely. Thank you for having me on, Soria. As some of you may know, I am one of the founders of WallStreet Wealthy. I'm a Case Western student studying accounting and going into my senior year. Today, I'd just like to share some other lessons I have to build on what Norman said. So I'll get started. Many skills are required for trading successfully in the financial markets. They include the abilities to evaluate a company's fundamentals and to determine the direction of their stock trends. But neither of these technical skills is nearly as important as your trader's mindset. Containing emotion, thinking quickly, and exercising discipline are components of what we might call trading psychology. There are two main emotions to understand and keep under control: fear and greed.
So, when talking about fear and greed, what traders often are faced with are snap decisions that they must make quickly. So, can you talk a little bit more about that?
So I'll talk about snap decisions now. Traders often have to think fast and make quick decisions, darting in and out of stocks on short notice. To accomplish this, they need a certain presence of mind. They also need the discipline to stick with their own trading plans and know when to book profits and losses. Emotions simply cannot get in the way.
When you say emotions cannot simply get in the way, I'm assuming you're talking about fear. So, can you touch a little bit more about understanding fear?
When traders get bad news about a certain stock or about the economy in general, they generally get scared. They may overreact and feel compelled to liquidate their holdings and sit on the cash, refraining from taking any more risks. If they do, they may avoid certain losses, but they also could miss out on serious gains.
I feel like this is a very superficial understanding of fear. Can you maybe dive a little bit deeper into the topic?
Traders need to understand what fear is. It's a natural reaction to a perceived threat. In this case, it's a threat to their profit potential. Quantifying this fear might help. Traders should consider just what they're afraid of and why they're afraid of it. But that thinking should occur before the bad news, not in the middle of it.
So, I feel like fear and greed go hand in hand. So, can you talk about overcoming greed?
I'll talk about overcoming greed. There's an old saying on Wall Street that pigs get slaughtered. This refers to the habit greedy investors have of hanging on to a winning position too long to get every last tick upward in price. Sooner or later, the trend reverses and the greedy get caught. This greed's not easy to overcome. It's also based on the instinct to do better, to get just a little more. A trader should learn to recognize this instinct and develop a trading plan based on rational thinking and not whims or instincts.
You mentioned one must develop a trading plan, and this entails developing your own trading rules. So, can you speak about some trading rules you may have?
Okay, next I'll talk about setting rules. A trader needs to create rules and follow them when the psychological crunch comes. Set out guidelines based on your risk reward tolerance for when to enter a trade and when to exit it. Set yourself a profit target and put a stop loss in place to take emotion out of the process. In addition, you might decide which specific events, such as a positive or negative earnings release, should trigger a decision to buy or sell a stock. It's wise to set limits on the maximum amount you are willing to win or lose in a day. If you hit the profit target, take the money and run. If your losses hit a predetermined number, fold up your tent and go home. Either way, you'll live to trade another day. And thank you, Story. That's what I have to share today. I'll hand it back over to you.
Thank you so much for your time and for your advice, man. Once again, everyone, that was Mark Eggelsetter. Mark is a senior at Case Western Reserve University studying accounting. He's also one of the founding members of Wall Street Wealthy, and he's currently studying for his CFA exam. So that's all we have for you today, folks. Thank you for tuning in to the first episode of the Wall Street Wealthy podcast. As you may have noticed, I'll be doing far less of the talking during this podcast series. That is because I'd like to use this as an opportunity to bring on other people to share their experiences and stories regarding trading so we can learn more, earn more, and grow together. Once again, I'd like to thank everyone for tuning in. I'm your host, SP Warren, and I'll see you next time on Wall Street Wealthy.